Bitcoin is a machine for wealth creation, but it is also a relentless stress test for the human psyche. The path to building generational wealth with Bitcoin is not determined by market timing or trading. It is determined by the investor's temperament, conviction, and ability to manage extreme emotion. The asset's notorious volatility, seeing 30 to 80% correction in a matter of weeks, is the point at which the majority of investors fail. Selling at the exact moment the market rewards patience. To succeed, you must adopt the HODL mindset, which is fundamentally a psychological defense mechanism against poor decision making. First, you need to conquer the desire to trade. The natural human instinct, fueled by fear and greed, is to try and time the market, selling before a crash and buying back at the bottom. This impulse is the primary destroyer of long term wealth in volatile assets. The data doesn't lie. Countless studies have shown that missing just the best 10 days of a bull market dramatically reduces an investor's total return because Bitcoin's massive upward moves happen rapidly and unpredictably. Attempts to trade almost always result in selling the majority of your stock before the next spike and buying back higher out of FOMO. This creates a psychological whipsaw that is both emotionally draining and financially ruinous. The solution: dollar cost averaging. The HODL mindset dictates that you must remove emotion from your accumulation strategy. DCA is the simple, powerful act of committing to buying a fixed, manageable amount of Bitcoin on a regular schedule, regardless of the current price. It forces you to buy more units when the price is low and fewer when the price is high. This strategy not only flattens your cost basis, but critically, it shifts your focus from trading to accumulation. Your goal is not to trade for dollars, your goal is to accumulate more Bitcoin. Number 2, the antidote to panic selling: zooming out and establishing conviction. When the price has dropped 60%, when headlines are screaming Bitcoin is dead, and when friends and family are expressing concern, the primal urge to panic sell is overwhelming. This is the moment of maximum pain, and it is precisely the moment true conviction is required. The antidote to panic is a healthy dose of perspective. When you zoom out on Bitcoin's long-term logarithmic chart, the current drop, no matter how severe, is reduced to a minor blip on a decades-long exponential growth curve. Every major bear market in Bitcoin's history from 2011 to 2014, 2018, and 2022 has ultimately been followed by a new all-time high. The volatility is a feature, not a bug, as it is a natural consequence of the market discovering the price of the first truly scarce digital asset. Panic selling is a failure of conviction. You must have a deeply researched thesis for why you own Bitcoin before the crash happens. This means understanding the scarcity, why the 21 million hard cap is immutable, and the monetary policy, why the halving cycle drives its long-term value, and the decentralization, why it cannot be censored or shut down by a government. When the price drops, your conviction acts as a psychological shield. You are not selling a volatile speculative asset, you are holding a piece of decentralized digital property whose fundamental value proposition, absolute scarcity, remains unchanged. Number 3, securing your mind and the importance of financial hygiene. You cannot be a successful hodler if your investment is compromising your day-to-day financial health. This leads to the most crucial piece of advice: never invest money you cannot afford to lose for the next 5 to 10 years. Defining the affordable loss. If you invest your emergency fund, your child's college tuition, or money needed for rent, you are setting up a psychological time bomb. The moment a drop occurs, you are forced by external necessity to liquidate at a loss. Your financial stability outside of Bitcoin must be rock solid. You need a secure job, a 6-month emergency fund in fiat currency, and all high interest debt eliminated. Once your base financial security is established, then you can allocate a small, fixed percentage to Bitcoin. Fiat currency encourages high time preference, the desire for immediate consumption because money loses value. Bitcoin encourages low time preference, the ability to delay gratification because your wealth increases in value over time. Holding Bitcoin is an act of deferred consumption. This psychological shift promotes prudence, patience, and long-term planning, not just in finance, but in all aspects of life. In essence, succeeding with Bitcoin is not about being a brilliant investor, it's about being a disciplined hodler. It requires commitment to a long-term plan, a deep understanding of the asset's revolutionary technology, and the emotional fortitude to do nothing when the market is screaming for action. Master your mind and you will capture the wealth building potential of Bitcoin. Of course, none of what I said in this video is financial advice, and it's all just for educational and entertainment purposes. If you enjoyed this video, make sure to like the video, and if you want more no BS videos about Bitcoin investing and the technology and everything around Bitcoin and the crypto market, make sure to subscribe to the channel. Thank you for watching, and I must see you in the next one.